Well, what a strong move. In fact, the Bank Nifty is now 550 points. So from 230, in a matter of 33 minutes, we have doubled the Bank Nifty's gains. When we started the show, so it was up somewhere around 250 points. It's now up 550 points. That's the power of the short covering move that you have at this point in time. The high for the Bank Nifty was 30,005 or 6, somewhere around that, 200 points shy of that. You're there almost. My sense is at some point in this expiry, you'll have that. But Mitesh is with us for some BTST calls. Mitesh, thoughts on index first? A stunning move. Are we getting back to the recent highs within this expiry? Is that a call that you want to take, or is there any other trade on the index? And what about individual stocks?
So Anuj, I think my view always was that we'll do a range of 11,350 to 11,550. I think we are heading towards the upper end of the range. Now the key question is that whether we'll get past this. I still don't have those signals. I think the intra indicator is still flat because of the decline and then just bouncing back. So there's just kind of evened out. So I think we'll assume that around 11,550 would be good levels to take profits as you approach those levels. The BTST call which I have, Asian Paints is a buy with a stop at 1474 for targets of 1530. And Page Industries, I think Sandeep also highlighted, that's a BTST, keep a stop at 23,900, look for targets of 24,650.
Okay, those are some ideas you can work with. By the way, today, some of these Reliance ADAG group stocks, they have done quite well. Reliance Infrastructure, Reliance Naval, for whatever it's worth, these stocks have found some takers today on the trading side. Many of them are, of course, single-digit stocks. Mitesh, I just want to get some levels on a couple of the main index stocks that are surging this afternoon. So levels on RIL, this stock is almost 3.5% up now. So next levels on RIL and next levels to watch on Bajaj Finance.
Surbhi, I am looking at 1420 as the 1420, 1440 as the next set of targets. But I think the recent highs of 1385, 1387 would be an important factor to count in. So we'll begin with 1385, 1387 as your trading target, and then once that is crossed, 1420, 1440 is the overall range which I have been looking at. Bajaj Finance, extremely good charge. In fact, from trading point of view, I think this still remains a stock which can possibly see higher levels. I think the recent highs of 2950, 60 should be crossed. And once that is being done, I think 3050 to about 3075 should be a working technical target.
Okay, that's Bajaj Finance looking good. Ashwani is also with us. Ashwani, your BTST calls?
See, basically the banking sector looks very strong. So BTST should be from there. RBL is a buy with a stop of 650, target of 665. ICICI Bank is a buy with a stop of 388, target of 410. And SBI is a buy with a stop of 295, target of 312.
Okay, so going with lots and lots of financials, and it is really these stocks that have got the lion's share of interest today. All of them surging to the highs of the day. Look at the Nifty Bank, about 2% on the upside. So Anuj, a lot of people would really want to believe that what we saw on Friday and on Monday was just a short-term blip, some negative headlines from the international markets. And, I guess people will ask the question again, is the Nifty now going to take aim at the original all-time highs?
Looks like, you have to respect the screen and the price behavior. I think that's important. Also, Surabhi, we're all fixated with this last move, and we're trying to attribute it to post Balakot or the kind of money that we had. Let's not forget that over the last 1.5 years, we have had a crunching bear market in the mid caps, and a lot of good quality stocks which are available at very good valuations. It's okay we talk about trading moves here and there. That will happen, but ultimately, big money in stock markets is made. When you buy good quality stocks in bear market, and if you've done that, I'll just give you an example. NCC. Just look at the 3-month chart on NCC. Remember we were discussing this after last quarter's numbers on NCC. The stock used to be somewhere around 75, 76, and from that point it's up 200, 111. Now this is not a stock recommendation, but at some point over the next 1 year, you'll perhaps look at some of the auto names and say that okay, these stocks were available at throwaway prices 1 year back. So the point is, in stock markets over the last 1 year, the one lesson has been if you buy good quality stocks at below median valuations, chances are that you make good money.
Okay, well, right now this is a big roaring market on the upside. We are still in conversation with Deepan Mehta. Deepan, let me actually take that point forward with you, because if there is one pocket where you're getting value, it's definitely the auto space. Here, for the next 6 months to 1 year, I mean, if you were to add something to the portfolio, what would your top choices be?
I think go with the market leaders, that is Maruti as well as Eicher, and if one has a relatively longer term horizon, then these companies eventually will go back to that double-digit type of volume growth rate, and then all the declines will certainly get covered up. They'll get benefits of operating leverage, and margins are also improving because cost increases have come under control, and some of these products they've already taken price increases. So I think that maybe in the next 2-3 quarters or so, once you see the actual volumes improve, these two companies are available at attractive valuations on a historical basis if you compare, and they could turn out to be outperformers, but one needs to be a bit patient, and there could be a few disappointing quarters because of the kind of stagnation which we have seen in the volume growth rate. So maybe March and June quarters could be disappointing, but as soon as the monthly numbers start to show that double-digit type of growth rate, we'll see the stock prices starting to move up immediately.
Okay, all right, just stay on. We will look at some more market opinion that we gathered during the course of the day. This is a view that is coming in from Andrew Holland of Avendus Capital Strategies. We got his take on the spurt of FII buying that we've seen and whether these kind of flows would be sustainable, and also a sense of the kind of sectors that he likes at the moment.
My view is that the US is in recession and everything else will follow soon after. That means that yields, as we've seen anyway, will go down, and that will take a risk-off trade, and India will be seen as a safe haven, which is why you've seen so much flows coming back to India. And there's obviously that bit of catch-up as well. So I think India's in a reasonable spot, because if I think 6 months out, is that what would I see then? I'd see hopefully a stable government. That's the first thing, but more importantly, a lot lower interest rates globally and in India, along with lower commodity prices, including oil and metals, and that's a great environment for India. So I would expect these flows to continue quite strongly throughout the next 6 months.
Okay, so are you net long? I mean, are you more long than short at this point in time? You betting on liquidity rather than on the growth that is not there?
It's a combination of factors. I mean, if I just split out your kind of shorter term liquidity, then the RBI in April can easily kind of reduce interest rates by 50 basis points if they have the inclination to do so. So there's your liquidity factor, which is going to be helpful. And then obviously as global yields fall, that's going to be another factor which will help that the RBI in their thinking, and commodity prices will be the next leg. So if I look at that, then both shorter term and the next 6 months should be good for kind of liquidity driven type stocks such as the banking sector, and that's really what you've seen in the rally actually in terms of the banking stocks. So that I believe will continue.
Would you be a bit cautious on the IT names now? I mean, there are reports emerging that, BFSI is weakening in both US and in Europe, and you don't have the rupee tailwind anymore as well. How would you approach this space?
The problems for the global banks is that if your yield is falling again, then there's no real growth for them. So it's more of a profit problem for the banks and trading problem, rather than it's a slowdown in terms of the work that they're doing or the outsourcing that they're doing as well. So I'd still like the IT sector. It's had a good run, it's had a nice pause, and I think it's probably ready for the next upturn going forward, because I do think the rupee is probably slightly overvalued. I think it should be nearer to 70, not 68.
Andrew, the poster boy of last bull market, Maruti, is seeing a crunching bear market, and it's got some other stocks as well in company. Are you tempted to buy at these levels, or you think the structural story perhaps could be over here?
No, well, it's a structural sell. So all of the auto sector, and the reason behind that is that I'm not saying that things have gone so bad, but the growth rates they've enjoyed are just not coming back for some time. And what you're going to have is, as you always have in this environment, is you're going to have to either discount more They're going to have to advertise more, which all means that the margins are going to be under pressure. So that operating leverage that they've been enjoying so much is just going to go away from them. So until I see analysts, reduce forecasts by at least minimum 20% across the board, then there's more pain to come, because forecasts are too high, that's for sure.
I'm not asking whether you're buying Jet or not, but how does one think about Jet now?
It's been a great story. I mean, they really have done a lot for the airline industry in India and what our expectations should be. It's difficult to say, we'll have to wait and see, but I would have thought whoever comes into it, it's going to take a long time to get back to the kind of heydays of where they were. And I know all the airline stocks have rallied recently, but none of them make money, and domestically, I just can't get my mind around that, because every flight I catch, and I'm sure you do, is always full. So I don't know what's operationally wrong with these airlines, to be honest.
What about the other pockets, consumption, consumer durables? Because we hear that there is a lot of undercutting happening, big price cuts in appliances because of weak demand, etc. Is consumption a pocket that you're going to stay away from for a while?
The consumption story in India is just not going away from us. So when you get these pockets of kind of negativity around very short-term kind of trends, it's a great time to be just loading up, because over the next 2 to 3 years you're going to make a lot of money. I think there's only two sectors I think about where you're going to make a lot of money over the next 2 to 3 years, and that's banking, and that's consumer spending.